In this episode, my friend Tyrone sits down with me for the second time. He was on last year, and we pretty much get caught up. He's 3 years into the infinite banking concept, 3 years into becoming his own banker, and we talk about some family dynamics and 401ks and a little bit about retirement. We had a good conversation and hope you enjoy listening. Thank you. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm excited. I'm always excited when I have friends and clients come on as guests, and Tyrone is with us today. He has been on previously in two-part episodes, 130 and 131, and I think that was titled Building and Controlling Generational Wealth. And my encouragement is for you to go listen to those, especially if you are newly, exposed to this idea of the infinite banking concept, becoming your own banker, because Tyrone gives, a thorough, legitimate overview of the infinite banking concept, becoming your own banker. And I thought it was very powerful because it is very powerful. And so my encouragement is to go listen to that if you have the opportunity, and you'll be glad that you did. And, Tyrone, I guess we've known each other a couple of years now, and I'm very excited that, you're here with us again. And I appreciate the time that you've carved out for us and the opportunity just to, catch up. Okay. How are you?
Hey, James. I'm good down here in Magnolia, and you're right. It's been coming up on 3 years, since I've been, a practitioner of the IBC concept and met you. And both of those endeavors have worked very well in my life. So I'm still, excited about, this concept. And I'm because I'm such a firm believer in it. And as I said from that first broadcast or podcast, the reason that I love the concept so is because I was looking for the concept before I found it. And so it was a natural fit for me. And just a positive, powerful financial tool, that is needed, and I think it's worked well for me and my family thus far.
I appreciate that, you saying that and sharing that. It's worked well for me and my family too, really better than I thought. And going back, I've done this quite a few years, and when I was first exposed, I'm thinking, man, there's something wrong. This is too good to be true, or I've never heard it. And I've been in the life insurance business, 14 years, and I knew it was good. Couldn't really put my finger on it. And, literally for the first probably 4 years, I was looking for the problem, what was going to go wrong, what was wrong, when's the hammer going to fall, kind of looking over your shoulder, like, just really not expecting, but I wouldn't have been surprised if there would have been a problem, just kind of looking for the problem. And the problem never appeared, the problem has always been between my ears. And I'm just saying, I've had the same experience. It's gotten better and better than I expected, and what other, financial endeavors do you engage in that continually get better and better? So.
Well, yeah, it's ironic you should say that because, obviously, I spent 37 years working, for the electric distribution company here in Houston. And obviously I was part of participating in the 401k process. And so you look at, James, the stock market today, and you can kind of see where it is headed south. You look at the banking today.
Oh yeah, let me just say that we're recording this on the 16th of March, and so all of these banks have just 4 or 5 of them have 3 of them for sure, and
Yeah.
have collapsed. And so I just want to interject that kind of time frame.
Yeah. So, yes, great point. And so what's so ironic about this, James, is I received a call yesterday. And as you know, I've got 8 kids. So, and so it's my 27-year-old daughter. I mean, yesterday, Wednesday, she calls me, and she calls me from work. She goes to school. She still goes to school, but she's also works full time as a carrier for USPS. So she's a mail carrier, and so she calls me. She says, "Dad, let's talk Silicon. Let's talk banking for a second." Yeah. So I says, okay, let's talk banking. So she says, so I'm out here working hard and trying to do good with my money. She says, where in the world she said, where in the world does a girl go just put her money and it keeps, and it stays safe. You know, she can safely keep her money. And I thought about, you know, all the times, you know, that I still, you know, as you know, I said in that first podcast, my family and I were still tight knit, and we still have what we call a state of the Whitfield family discussion. So they all come home and we sit down, we have meetings. And I've introduced them to the IBC concept every chance I get. But sometimes, James, it's kind of like you hear, but you don't hear. and so I then begin to say, well, you know, dear, the infinite banking concept that we talk about during our meetings, I said, you know, you can kind of see now where the safety it provides comes in. It's a safeguard. It's guardrails for current situations that we see happening with the banking today. You know, so it's a safe place where you can save your money without being worried about am I going to lose it? Am I going to lose more this month than last month? Or, you know, those kind of situations. So it's almost like the light bulb went off for her again. She says, oh, yeah, we have been talking about that. You've been mentioning that. And so I began to tell her there again about the IBC process. And if you have money, especially savings, don't, you know, take it out and stick it under a mattress. Don't do that because you're losing. But you should consider the infinite banking concept and whole life insurance policy, and then saving that money within that policy, and the power of the insurance is that's the other thing we kind of talked about too, James, was the differences between a bank and an insurance company. It's difference between, you know, even the way they handle the money, the banking. You know, I told her, I says, every deposit you make, that bank can take that money, that paycheck that you deposit, and they can turn around and loan that out up to 10 times the value you put in there. She says, well, where do they get that money from? I says, they don't have it. The money is just created out of thin air. I said, they don't have the money, you know. So I said, that's the problem, you know. So they're doing this kind of thing. So you have enough people come in, they hear about a bank maybe having a situation or having trouble, and they come in, hey, give me my money, and everybody starts making a run on the bank, and then before you know it, the bank is like, hey, we don't have that money in the back room anywhere. So, you know, it leads to trouble. So you don't run into, I told you don't see that with the, you know, insurance policy. You know, you see it with the banking policy, with a banking account, but not necessarily insurance. That's the difference. So her, you know, light bulb went off for her, and she, you know, walked away with a, you know, positive experience from what we have been telling her number of times before.
Yeah. Most people, don't really think about it. Excuse me. We don't get up every day thinking of bank runs, but that's what happens. It's part of the fractional, reserve banking system. There's they don't have reserves. They're thin reserves. And, just like you said, they can leverage 10 to 1, right? 10 deposit 100,000, they can loan out 900,000. Well, actually banks can lend out much more. They're leveraged much more than 10 to 1, right? And then even to do that, they're creating money out of thin air, where a life insurance company, they can't leverage that. They can't create, cash values out of thin air. They can't, which is what you borrow against in a life insurance policy is the cash value. So they can't leverage those cash values. So then they can't, leverage the loans. Now they do invest in bonds, right? So you hear a lot of that, and I'm not pretending to know exactly all the details of SVG Bank and the other banks that have invested in cryptocurrency, and then they're all leveraged at Silicon Valley and, heavily leveraged into mortgages and of Silicon Valley employees that are losing their jobs. And so there's a number of things that went on top of the money that they're probably laundering for all of the, big name people in Hollywood. I don't know all of the details, but as interest rates go up, bond values go down. You're going to hear a lot about that. Well, then we had to liquidate the bonds at a loss, and then that just catapulted into all these hedge funds withdrawing their money and blah, 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 and blah, blah, blah. Same story over and over. But how do you take a $200-something billion company and you can't withstand a 1% compression on $2 billion worth of bonds? Yeah, no, the math doesn't add up there either, right? Anyway, I digress a little, but if we go back far enough, the Federal Reserve, right, was created in 1913. So that is the central bank of the United States. The last one, the current one. There were two previous to that in history in the U.S. But my point here is these life insurance companies, and I'm not saying there's, pure as the driven snow at all, but they predate the Federal Reserve.
Yes.
They predate the tax code. This idea of saving money, quote unquote, paying a premium, accumulating a cash value, a store of wealth, a store of capital is not new. It might seem new to us because we've been surrounded by 401ks since the 80s. And this is where you put your money in a 401k, an IRA, and the Keogh plan, and the market. Well, prior to the 80s, you look through the 30s, 40s, 50s, and 60s and beyond, even, the 1830s, 1840s, 50s, 60s. It was very common for us and our, ancestors to buy life insurance and to put money into life insurance. Right. And, today, though, that's almost a foreign concept. But it's so simple when you look through the structure, And then too, as a side note, and I can't prove this. I've heard this several times in my career over the last 30 years. And I'd really like, if I find the documentation, I'm going to, shout it from the rooftops. But in the 30s, I understand, I've been told and read somewhere, I believe, that some of these life insurance companies paid their dividends in gold to make a point. So, it had to be pre-1933, right? Because that's when FDR put out that executive order and gave our people, 3 weeks to turn in their gold, right? So it had to be prior to that. So probably 32 during the Depression, 29, 30, 31, 32. Think about that. What a statement. What a powerful statement. Here, you want a dividend? Come get it in gold. That's crazy, right? So,
try having a bank pay that interest in gold.
Yeah, go make a withdrawal, right? If it's $5,000, $10,000, $15,000, $20,000, you better call them and give them a week to gather up the money. I don't know.
Yeah. In fact, that's an excellent point, James. You brought out some excellent points. That was another part of the conversation I had with my daughter yesterday. How that I told her I had needed exactly $2,200 for something 3 months ago, and I can't remember what it is right now. But I went to the local branch, and it's $2,200, not $22,000, $2,200, and the branch says, "Well, we'll get it here for you next Wednesday, or we'll get it to you 2 days from now." $2,200.
Seriously, wow.
And I couldn't believe it, but that's where it is. The point I was making to her was just reemphasizing that the banks, they do not store your deposit in a vault in the back somewhere. That money's lent out, and so it's just amazing how that process works, and it can lead to trouble. Yeah, as you said, if everyone makes a run.
Yeah, and I don't even know what the ratio to actual physical currency to digits is, but I'm sure that talk about storage. They've got it stored on a computer system, at the Federal Reserve. It's like they're digits,
Yeah, absolutely.
But it's part and parcel, just like the boom bust cycle is part and parcel of the economy. Bank runs are part and parcel of fractional reserve banking, period. Yeah. Period. And that's just, and you talk about the current economy and the market, which we can't control any of that. We can't control what interest rates are. We can't control what the market is or isn't. But what we can control as an individuals, sometimes we can control what comes out of our mouth, right? Sometimes if we have discipline, right? Sometimes we can control what's going on between our ears. And, sometimes we can control what we actually do, where we actually put our money, right?
Right.
And so we can control our actions is my point here. And if there's something wrong, and everybody knows there's something, we all intuitively know there's something wrong. We might not be able to put our finger on it. Anecdotally, we can say, well, yeah, the market's down, or, there's a couple of banks collapsing. But much more than that in our big, broad economy, we know that something's not right. Well, and if that is the case, it's okay to explore that, and just kind of think that through. Just pay attention to what's going on. I'm not talking about being esoteric and reading tea leaves. You can listen to what they say, and you can watch what they do, the markets, right, the banking industry. And then you can do something about it in a proactive manner. You can, whether it's self-preservation of wealth, whatever it is, you can be proactive. And what if you made a mistake? I mean, and I'm not trying to run on and on here, but, I'm encouraging education, right? Just kind of pay attention to what's going on. And if you think there's something wrong, then I'm encouraging you to do something about it and to educate yourself. But then even if you make a mistake, you can recover from mistakes. It's like, at least you did it and you could learn from it. It's not like, putting money into the market somewhere, and I'm not an anti-market guy, but putting your money somewhere in the market you have no control over and then lose money. It's like, what'd you learn from that? Does that make sense? I mean,
yeah, absolutely it does, James. And I agree wholeheartedly with that. The thought comes to mind of I like one of the points Nelson Nash made in his book. It may have been one first book or the second book, or maybe both, but he was talking about money and it needing to reside somewhere. And there's options where it can reside. It can reside under the mattress. It can reside in a savings account. It can reside within a whole life insurance policy. And for me, having done the homework that I did measured against, some of these instances you brought out, the safest place that I found was, having it reside within my whole life insurance policy. And let's face it, the other part of that too is I know for me growing up as a kid in the 60s, I saw my parents do that. Whole life insurance policies were not foreign or not uncommon. They were they were a very common vehicle.
Yeah.
And there were several policies within homes and I can remember as a kid, the neighbors, the same insurance guy who would, be an agent for my parents, he would go to my neighbors, and so everybody had them. And I saw my parents let their money. I don't know how much I was a kid, but I know they had money residing in those policies. And so that's why I would encourage everyone, just put on the brakes for a minute, tune out a lot of what you're hearing, and that's not traditional. It's more traditional than what you think is traditional because it predates what you're calling traditional. But it's time, man, I need my money safe. I need my money safe. I worked hard for my money, and I want to keep it as safe as I can. And so, investing it there or saving it in my insurance policy has really allowed me to sleep at night. I'm not worried about it. And not only this, James, I'm give you another example of utilizing my policy. I had since the last time we talked, which I think was last April, I had decided, okay, I need a truck. And so, as I said, James, I've had 8 kids, man. And so I'm not gonna rehash how many vehicles I have bought. Oh my God, man! And every kid, they all have their own vehicle. I mean, anytime you live in the greater Houston area, you have to have wheels, man. There's just, you have to have your own wheels. And so I'm not going to rehash all of the thousands and thousands and thousands of dollars I paid in interest over time. But this time was different. I says, okay, I need a truck. I told my wife, Denise, this, I need a truck. Now, having all those kids, I've owned 2 15-passenger vans. Wow. I've owned 2 of them now. Sure. Now, not at the same time. One replaced the other one. But
you wore 2 of them out, huh?
So, anytime you talk about the kids and then their friends, you have to have room. So, but what I found out from that was, and I'm a Ford man. I love Ford vehicles. And so I found out I got 300,000 miles easily on those vans. And I'm the kind of guy, I'm going to take a vehicle and I'm going to squeeze all of the juice out of it. So my truck, it had run its last mile. And I said, I'm giving a new truck. And so I said, okay, I've been practicing the infinite banking concept now for over 2 years. And I walked in, I said, I'm going to go to that car dealer. And I was talking to my wife. I said, how do I want to do this? It's so great to have options, man. It is so great to have options. So I said, so how do I want to do this? Do I want to go in and maybe instead of him, last thing you want to hear from a car salesman is, what do you want me to make your note? Because he can make it that, but he's eating you alive with interest, man, and you don't know it. So I walked in, and so I'm thinking, okay, I can decide what I want my own note to be without paying him an arm and a leg in interest. That was a great feeling. But what I opted to do, watch this, James. I said, you know what? I'm going to go in and I'm just going to buy it outright. I want my note to be zero with him.
Yeah.
And so that's what I did. I chose that option. I went in and I said, I want that truck. And he began to talk about payment plans. I don't want payment plans. I want it outright cash. He says, you gonna buy it cash? I said, yeah, I want it cash. And so he says, well, great. Is there a way you can dial in and let me see it? He wanted to see it.
Right. Yeah. Can't you finance it for 90 days and then pay it off? Yeah. You know how many of his customers walk on the lot and say, I want to buy something cash? Yeah, you were the only one he's seen in 5 years, probably. I don't know. It's in Houston, right?
Yeah.
Okay.
Yeah. Absolutely.
I'd like to see his eyeballs.
Yeah, absolutely. So it was an experience I hadn't seen since I was a kid, and I saw my dad pay cash for a used Cadillac. I think it was something like $2,400 then. But this one was not. This was like around 30 grand. But it was quite a liberating feeling, quite a powerful feeling, if I can even say that, to be able to go in and says, hey, I want that one. And, here's the cash for it. I don't want to deal with your finance room. I don't want to. And then, too, I'm not going to disparage this particular car dealer because I bought a lot of cars from him. Yeah. But it's still, I would rather pay anytime, I would rather pay an interest back to my own banking facility than I would paying it to Bank of America or someone. So I went in, I gave him cash. I drove out with the vehicle. So now what I did was, obviously, I borrowed that money from my policy. So anytime you borrow, that means what? That's still a loan. And my parents told me, pay what you owe, man. If you pay back what you owe. So I'm now the banker. I pay the note. I pay as much of that back as I want, or I pay as little of that back as I want. And I can tell you now, I have not been consistent with the same amount of payments over the month. And you know how many times I've heard from the life insurance company saying, hey, Mr. Whitfield, you didn't pay last month, or you paid $300 less than you paid last month. You know how many times I've heard from them? Zero. Right. They have not called. They have not sent me nasty grams. They have not sent me threatening emails or any of that. In fact, I've called them several times since then. They never even mentioned it. So it's incredible. If you think about that, those of your parent, you have teenage kids, you got to get things like vehicles, you got to get dental work done. It's incredible to go in, lay that out, cash, and then pay it back to your banking system as you decide, and not have anybody calling you, threatening you. That is, man, that's priceless. That's priceless.
Okay, so we went long, so we're going to cut it here and pick it up in part 2. Thank you for listening, and we'll see you then.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.